Good morning, everyone, and thank you for joining us on Morning Markets from True Potential. Today we'll look back at asset market performance from last week, discuss some of the key factors there, and then just look forward to some of the things that are coming up over the course of the next 5 days. So just looking at how asset markets ended the week, despite what was a level of volatility throughout the week, primarily driven by changes in the direction of sovereign bond yields, what did we see at an overall equity market level? Well, really little change in terms of the Euro Stoxx 50, the FTSE 100 over the course of the week. I suppose the volatility has continued to be driven by that factor that we mentioned in Europe about sovereign bond yields, but I think also specific to Europe, there's a number of other things that we've discussed that are important to keep in mind, and it really relates to the speed of vaccination rollout, but also this trend that we've seen in a number of European countries of rising COVID-19 infection rates, and you can see that in the chart that's just on the screen at the minute. So if we look at Italy and France and just Europe overall, you can see a slight movement upwards there in the trajectory of those curves relative to what is being seen in the UK and the US at this point in time. So that's an important factor that's there in the market backdrop. And again, what have we seen as a result of that? A number of European countries introducing further restrictions on movements, etc., which, as we have seen over the course of the last 12 months, does impact economic activity. So that there is really feeding into European assets. We contrast that with what we're seeing in the US, where very much it's about a focus on the economy reopening, and you can see that coming through in some of the data. If we look at the number of flights that are being booked, hotel rooms that are being booked, and even in some instances, companies starting to discuss how theme parks, etc., can reopen. So a real contrast between what's happening in Europe and what's happening in the US at this point. The US, just over the course of the week, equity markets there were weaker by about 0.3 to 0.7%. So again, masks that volatility that we saw. If we think about how that was sort of happened on Friday, what was influencing it, very much just about where the sovereign bond yield was. So coming in, it traded above 170, if we remember, towards the end of last week. That came back to 167, and that seemed to I suppose, give a little bit of stability, if you will, to markets. I think the other thing was just a bit of rotation within sectors. We saw some of those areas that had performed very well, the likes of the energy sector. That's been influenced last week primarily by the fall in the oil price, down some 6%. That's been driven by concerns just on back to what we were talking about before, economic growth in the Eurozone, given some of the issues there, and just also what we were seeing in terms of inventory levels as well. Those things playing together to weaken the oil price, weaken the energy sector. Then the other thing was just a regulatory change in the US around the reserves that banks have to hold. They get some exemptions on that at the time of 12 months ago to help with the response to COVID-19 from a financial sector perspective. Those were reversed, and we saw some of the major banks in the US down about 3% on Friday, and that influencing the financial sector. Over the course of the week, we've talked about this sort of pull and push between value and growth. There wasn't really much differentiation at an overall level if we look at the course of the week. So again, just speaks to the volatility, changes in sovereign bond yields. Really then focusing in on sovereign bond yields, what was the course of the travel over the week really? Well, we did see sovereign bond yields move out about 10 basis points in the US from 160 to 170 over the course of the week. Did, I think, on Thursday afternoon at one point touch 1.75. I think really the focus there in the bond market is very much still on this position of rising inflation expectations as a result of stronger economic growth coupled with the fiscal support that is also there, alongside accommodative monetary policy. We heard from the Federal Reserve last week, the Bank of England, Bank of Japan. None of these major central banks are minded to change their accommodative nature at this point in time, despite the improvement that we're seeing in economic trajectory. So that's, again, just a theme that is going to continue and stay with us at this point in time, given the importance of the narrative, the discussion around inflation. Currency markets, then, it's played out in the sense of rising sovereign bond yields, particularly US Treasuries. We've seen a bit of support for the dollar in that environment. So on a trade-weighted basis, the dollar was up about 30 basis points last week. So continued dollar strength playing its way through. Just over the weekend, one thing to mention, we saw the Turkish lira very weak against the US dollar, down some 15%. This morning, if we look at markets, very much triggered by a political change, a removal of the central bank governor, and I suppose it just plays to one of those themes that we've been discussing: the importance of central banks, the importance of central bank credibility, and the importance of central bank communication. Just looking then to the week ahead, quite a few important things to focus in on there. We get the PMI surveys across the globe. That'll really provide evidence of manufacturing service recovery in some regions, but there also will be a number of interesting contrasts in that, particularly between what's happening in the US, maybe even the UK, and contrasting that with some of the dynamics in Europe. Might not be that we're getting a sense of the true picture, given, as we saw in that previous chart, that spike up again in infection rates. But really there will be a divergence, I think, being illustrated there between Europe and other areas of the globe. Other things just to keep our eye on over the course of the week, we've got the Fed's favoured inflation measure, PCE. That will be released on Friday, so that will be front and centre of attention. In the UK, we've got a lot of data this week. Focusing in on the employment data at the beginning of the week, we move through to inflation data, we've retail sales, and then we have a number of the CBI surveys as well over the course of the week, giving a good insight into the health of the UK economy in January and in February. I think just the other thing to touch on in the US, I should have mentioned, we've got a large number of treasury auctions. Important to see how they are received by the market. We cast our mind back to 3 or 4 weeks ago. It was a 7-year treasury auction that didn't go as well as planned, that caused some of the volatility in the US treasury market. So we'll see how that plays out over the course of the week. I'll leave it there. Please do subscribe on our YouTube channel, and I look forward to seeing you again tomorrow. Many thanks.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.